All right, welcome to The Explainer. Today, we are jumping right into one of the wildest stories in crypto I've seen in a while. We're talking about a project that somehow became a multi-billion-dollar giant before a single token was even officially released.
Okay, just look at this number. $42 billion. That's the estimated market value of a crypto called World Liberty Financial, WLFI for short. And the craziest part? This wasn't after months of trading. This valuation popped up before the token was even officially launched. Seriously.
So you gotta be asking, right? How on earth is this possible? How does something that doesn't really exist yet rack up that kind of value? Well, to get to the bottom of it, we've got to unpack what's fueling all this hype. So let's get into it. All right, first up, the WFLI crypto phenomenon. We're going to unpack the hype, the funding, and the politics behind it all.
Okay, so what is WLFI? At its heart, it's a DeFi project, decentralized finance, built on Ethereum. The goal is to offer stuff like lending and borrowing. But here's the twist. Its whole mission is tied directly to a political vision. It's really closely associated with the Trump family. And that has attracted a ton of interest from supporters and, as you can imagine, a lot of criticism from the other side.
And we're not just talking about hype here. The money is very, very real. The project actually raised over $500 million. That's $550 million plus in its early funding rounds. This shows it had some serious financial muscle behind it from its very first investors, way before most of us had even heard of it.
So how did they get to that huge valuation before launch? Well, it all comes down to something called pre-market trading. It's a really interesting idea, so let's dig into how you can actually trade a token before it even exists.
The easiest way to think about it is like a futures market, but for brand new tokens. It's basically a platform where traders can make a deal, agree on a price, and lock in a trade right now for a token that they'll get later, after it officially launches. The whole game is about trying to secure a good price early on.
So in this market, you basically have two sides making two totally different bets. First, you've got the buyer. They put their cash down now, hoping to lock in a price that'll look like a steal later. Then you have the seller. And get this, they don't even need to have the tokens yet. They're just betting that they can get their hands on them for a cheaper price before the deadline and then pocket the difference. And the exchanges have made this whole thing surprisingly simple. For you, the user, it's just a few steps. You get verified, find the token you're after, and then you just have to decide, do you want to be a maker and set your own price? Or are you a taker who just accepts a price that's already out there? Once you're matched, the exchange just holds the money in the middle to make sure everyone honors the deal on delivery day. Okay, so all this pre-market action, all this speculation, it's all leading up to one massive event. The one date that everyone has circled on their calendar, the official token unlock, when the virtual finally becomes real. So let's look at the timeline here. Things kicked off on August 23rd when pre-market trading began. A couple of days later, on the 25th, early investors could activate their lockbox, which is basically just them getting their digital wallets ready for what's coming. But the real main event, the big one, is September 1st. That's the day the first wave of tokens actually hits the market.
Now here is the absolute key detail you have to understand about this launch. It's not the whole shebang. On September 1st, only 20%, just 20% of the tokens held by those early investors are actually going to be unlocked. That other huge chunk, the other 80%, nope, it's staying locked up, off the market, at least for now.
So who gets this first batch of tokens? Well, it's an exclusive club. It's only for those early pre-sale investors, the ones who got in for literally pennies on the dollar. They're the ones who get to start trading that initial 20% of what they own. And that massive 80% that's left over, its future will be decided by a community vote, by the token holders themselves, which of course just adds a whole other layer of who knows what's going to happen. Okay, so this brings us to the most important question for anyone even thinking about this market. With a setup like this, you've got to weigh the risks versus the potential rewards. What's the potential upside? And maybe more importantly, what are the huge, flashing red lights of risk here? For those early folks, the opportunity is just insane. Think about it. They bought in for as little as 1.5 cents, and pre-market prices were hovering around 42 cents. That is a massive return on paper. September 1st is their very first shot to turn those paper gains into real cash by selling that 20% portion. But, and this is a huge but, the risk is just as big.
And you can see it plain as day when you look at the pre-market data. The gap between what buyers were willing to pay and what sellers were asking for was, well, it was a canyon. You had some sellers asking for basically nothing, while the highest bid was an unbelievable $4,000. That's not just a little volatility, folks. That's a sign that nobody could agree on what this thing was actually worth. It practically screamed chaotic launch ahead.
So the big takeaway is this. You're looking at a perfect storm of risk. You've got extreme price swings that are pretty much guaranteed. You've got exchanges offering up to 25x leverage, which is like pouring gasoline on a bonfire. You have very little liquidity at the start, making prices jump all over. And the most important thing to remember, there's zero guarantee that the pre-market price has any connection to what the real price will be when this thing actually starts trading for real.
Now, a huge factor in what happens next is whether this token gets listed on the big exchanges, places like Binance, OKX, BitGet. Getting that stamp of approval is critical. It's not just about credibility, it's about liquidity. You need those deep pools of buyers and sellers to soak up all that crazy volatility and hopefully create something that looks like a stable market. And look, long-term, this can't just be about trading and speculation. For this project to have any staying power, it needs real-world utility. That's why partnerships, like the one with Aave DAO, which is a giant in crypto lending, are such a big deal. It signals that they're trying to build a real ecosystem here for things like borrowing and lending. It's their attempt to move WLFI from just being a speculative bet to something you can actually use.
So this all brings us to the final question as this unlock happens. Are we watching the next evolution of finance here? A whole new way to launch community-run projects that mixes money and politics? Or is this just the absolute peak of a high-risk, politically charged, speculative bubble that's about to pop? The September 1st unlock is going to be the first real clue.